Hi traders, this is Maurice from NGT TradersGroup, and what we are doing here today, we are doing a review of the monthly chart. Now it's the end of the month now, and as we reach the end of the month, we usually do what you call a monthly review. So in other words, what can we expect for this month? Would we expect this market to be going up or down? That's what the monthly review consists of. So now let's look at what we got here. We got the New Zealand versus the US dollar, and as you see here, it says the monthly. So now I'm looking at this chart, and I would like to ask a question. As you look at this chart here, what do you see? What does your eyes show you regarding this setup? Is there a setup or not? Is there a pattern or not? Okay, well, I'm going to point out the answers to you, because as I look at this monthly chart, I am seeing a pattern that is tradable. And this pattern is known to be a continuation pattern. So this pattern here, I'm going to go ahead and identify the pattern that I'm seeing here, and put a trend line underneath the bottom here and one at the top. Now as we are looking at this pattern here, we are going to be seeing what you call a flag pattern. Now what I'm seeing here is a upside down flag pattern. Now by just looking at this pattern here, I know that I should not be thinking of doing any buying on this pair. I should be looking to sell, and we are going to break this down so you could see why is it that I'm looking to sell. Now I do have some indicators at the lower level here. I shrink them because I want us to focus on this move here, and eventually I'll get them in. So now this pattern here is called, like we mentioned before, flag pattern. First we want to see the flag, the lower line is broken in the flag. Now as we can see here clearly, we see that it's broken right here. As soon as it broke, the next month the candle, it went back up into the flag. Now as we can see here, for the next couple months the flag is being broken, and we have a close outside, and then we have another bar close outside the flag pattern. Now I am expecting this to move approximately from where it is right now to this zone here, and as we look at that, we could see that this is somewhere around the 500 pip zone. Now is two things could happen. From where it is right there, it could find support at this zone here, and then it's a possibility that something good might happen in New Zealand, and then it could go back up to this zone here, and then possibly make a continuation move to the downside. But as it stands right now, I am expecting for a continuation move from here. After maybe a little minor pullback on the small time frame, I would expect a continuation move down to this zone. I'm not saying that we're gonna have a bar like this, like a one big bar that take we down here. It might take a couple months to reach down in this zone here. So this is what I'm looking at on the monthly chart. So now I'm gonna be showing you why I'm thinking the way I'm thinking right now, with some confirmation on the indicators. Now what I do have here is a 26 RSI. I also have a number 4 RSI. These are the two that we'll be looking at on the monthly here. So as we see, anytime the RSI breaks below 50 and stays below 50, it's considered into a downtrend. So now we have the monthly being considered into a downtrend. Now the next one that I have here, and as you can see, back to the 26 RSI, we can see here that while it was trending up in the flag here, it stays above the line, but now it trend right back up into the 50, and now it breaks the trend line right in the 50 zone to the downside. Before that happens, the number 4 RSI, that RSI is a very sensitive RSI to price action and what's going on in the market. So before this happened, we already have number 4 RSI broke below 50. So right here, when number 4 break below 50, to me that was a clue that the market is going to go lower. And as we can see here, that break below 50 was right around this area here, right when the trend line was broken here. It went below 50, because at first it was above 50, but it broke below right here. So now that it break below and it went back up above 50 and then break back below 50, that is my confirmation that this pair will continue down for some time. So I am looking to sell the New Zealand versus the US dollar for this month. I will not be looking to buy. So it doesn't matter if it turns around and go up because of maybe some economic news or whatever. I will only be looking to sell this pair for this month. Now we just flip this chart over to the day, not the daily but the weekly. So we have this on the weekly chart now. So we are going to be looking to see what the weekly chart is showing us. So now we can see here that the RSI that we just looked at on the monthly chart is trading below 50, and it's right here. And also the 4 is trading below 50 as well. Now on the weekly here, what we ideally want to see is we want to see a diversion. Now for the diversion, we use a MACD histogram. Now looking at the MACD histogram here, we can clearly see a diversion setup, and that is another confirmation of the downside move for this New Zealand dollar. So let's identify now the diversion. So the diversion here would be from this point here to this point here. Now, why did I pick those areas to become the location for the diversion? Now I'm going to explain that to you just a second. Okay, so now we look at the MACD and we identify those same location, and that one is from here to here. So what we can see here is that the location here represent this high on the histogram. The location here represent this high on the market. Now, what the market is telling us here and what the histogram is telling us here is conflicting with each other, because the histogram is telling us that this point here, right here, is higher than this point here that aligns with this point here. So that is a conflict that's contrary to what the market is doing. So when we see that, we call that a hidden bearish diversion. So now we have all these setups with the RSI, and then now we have a hidden bearish diversion with a lower time frame, which is the weekly, and this helps to confirm that we can look for some downside move on this pair. So now we see MACD aligning itself in line with the RSIs, and the MACD histogram is now trading below the 0 line. So that in itself is a very good clue to us that we have some form of selling coming. Now let's take a look at this closed candle. This is a weekly chart, so one candle represents 1 week's activity of trading. So looking at this weekly chart here and this 1 weekly bar, we can see that all these weeks in between here was very, very choppy. In other words, it didn't make a clear direction in here as to where it's heading. So now we see this 1 weekly bar overpower 1, 2, 1, 2, 3, well, let's say about 4 bars. It overpower 4 weeks worth of market trading. So now I am looking now to see on this candle here, if we do find what you call a pullback, I'm using the Fibonacci retracement to identify where it could possibly pull back to. So what I just did here, I just measure this weekly close bar here, and I drop a line right about the 50% zone. So what I'm ideally looking for, if this market start to pull back, I'm ideally looking to see the pullback up to this zone here, and then resumption of the down move. So that is ideally what I would be looking for this week. Now this market could just continue down without that pullback, because right now we see that it's very strong. So the whole week last week, everybody was just selling. From experience, we know that the market does pullbacks. So you might find a day or two when it pull back, and then up to the 50% retracement and then fall. But if not, then you could expect some real sharp move to the downside.